But most people who are using PayPal are still sadly using it, paying credit card fee and credit card risk.
So I have a question in terms of, I'm sure many people who are not as savvy with digital currencies are probably wondering right now because of what we're saying. What is the real big difference between, let's say, PayPal, Alipay, WeChat Pay versus CBDC?
Sure, that's a really wonderful question.
Like, why do we need that?
Yeah, okay, so you need it for a number of reasons because first and foremost, for developing countries, they need central bank digital currency because of financial inclusion. It basically gives humble people who were not able to access the traditional banking system access to electronic banking services with or without an account. And eventually, after they get a certain amount of money in their account and it becomes big, they have to get a bank account. But the point is, it gives them access to financial services.
What was restricting them from access before? Like what specifically?
The banking system. So when you look at, earlier on in our discussion, I said, if you looked at the banks in China, they're built really on a Western model. And that would be the same for Indonesia, Vietnam, and a lot of places. They imported Western models for banking. And that model says, who are you? How much money do you have? Are you a good credit risk? Why should I bother with you?
KYC.
Yeah. So it's, know your customer rules.
Yeah.
But it's also the underlying concept that it costs me money as a bank to maintain an account. Therefore, I have to be ensured that you are worthy of me opening an account. Now, in a digital world with WeChat Pay, Alipay, central bank digital currency coming along, the concept of you having, I don't really want to call it an account, but you having a digital presence is free. There's no cost associated, so sure, we can give it to everybody, or minimal cost. I think it's fair to say.
What about overdraft fees? Isn't that a big thing too? Like that affects kind of like the poorer class?
Oh, look, overdraft fees are, let me speak to the United States experience. Overdraft fees are the single most regressive tax in the United States and are a sad blight on the banking industry that is frankly unforgivable in my view. And I was a banker for 18 goddamn years.
Yeah, you're an investment banker.
I was an investment banker, not a retail banker, but overdraft fees are horrific. And in a digital world where digital payment is immediate and where I go to my WeChat account and I say I want to pay 1,000 kwai, but I only have $9.99 in my bank or other account, I can't make that overdraft fee.
So
that's a lot of these overdraft fees are gone. And that's why the Western banking system loathes central bank. One reason why they loathe central bank digital currency and digital payments, because it's going to kill a really good deal for them. Let's go back to this question of why a CBDC?
Yeah.
Why? So if you're in a developing country, the number one reason is bringing financial inclusion to your population.
Because you're bypassing a bank in that regards, right?
You are bypassing a bank to a certain degree. And then what happens for all of these programs when you have more than a couple $1,000s, for example, on the card or on your central bank digital currency wallet, then they say, well, if you want to have more than X number of thousand US equivalent, then you have to open a bank account. So really poor people don't have thousands of dollars in Asia developing world, But so what it is in China is that it's up to around 10,000 RMB on these China has these little credit cards and they have little digits on them and a keypad. And those are central bank digital currency payment cards. They do not require a cell phone. They do not require signal. They can be used for direct transfer of digital currency from one card to another or one card to a phone with no supporting technology. And that's fantastic because it closes the digital divide for China's elderly. Okay? So that's inclusion. That's all part of the financial inclusion picture. But then we have to look beyond. Okay, so what's the incentive for the European Union, which is now a year and a half into its digital euro program? They're building one, and God bless them. They're doing a great job. I cover them all the time, and I can't say how wonderful a job they're doing. But so what's the EU's reason for doing this? Okay, for them, it's to improve the payment system, to get it off of these credit card networks, to make it so that you have better freedom of payment and ease of payment, which they modeled essentially on crypto. But they want a better payment system. The third thing that it does is something that is very rarely discussed, and I'm going to bring it in here. And central bank digital currency is much less about how you pay for your coffee and much more about a future where machines will pay. So we're really at the cusp of a point where your car, let's take the machine most people know best, right? Take your car. Your car will have a built-in digital wallet inside, and it will pay for gas. It will pay for tolls. It will do things and interact with its environment all on its own. And you can program it for certain interactions. I don't want to spend more than $50 or 50 euro at a time to buy fuel or electric to replenish in my car. All right. So we have to be futuristic looking a little bit. We got to think of central bank digital currency as being a really important part of digital infrastructure that allows for nationwide, ubiquitous digital payment. You don't want to have your car drive up to a gas station and say, I only take Alipay, I only take WeChat Pay, I only take Visa, I only take MasterCard, no American Express, right? No, you want these machines to have a universally accepted, free of charge bit of national digital infrastructure that connects the entire nation. And that's mind-blowing. So what are the big motivations for central bank digital currency? Okay. Number one, financial inclusion. Number two, to make a better, more robust payment system. Okay?
What exactly makes it better and more robust?
It's better because it's free and more equitable for people, and it's more robust. The government would argue that their nationwide systems are somehow better, or that's a tough one. I admit. I'll give you.
Gotcha.
You got me on that one because look, Visa,
What, less
Master,
volatile or what?
they would. Okay, so here's the argument. I got it. I'm back on track. Thank you. As our payments go digital, we rely wholly on two companies. In the West, it's Visa and MasterCard. And in China, it's WeChat Pay and Alipay. And should any of these networks fail or have a problem, our entire economy is crippled. We need a third payment option so that should anything happen to these others, they become compromised, we have greater redundancy.